focus on Star Health and Allied Insurance. The stock has been an underperformer. It's down 4% in the last 1 year. In terms of a Q3 performance as well, their net earned premium went up about 16% year on year. The underwriting profit declined 9%. To talk more on their business momentum and outlook, we have Nilesh Kambli, who's the Chief Financial Officer at Star Health and Allied Insurance, joining us now. Nilesh, thanks a lot for joining in. Can you tell us what was the growth that you saw in the net earned premium in Q4? And what is the expectation both in terms of retail as well as the group portfolio growth going ahead?
Thank you for having me on the show. So on an overall basis, we continue to grow at 18%. What we need to see is the growth in the gross written premium, which is growing at a healthy rate of 18%. On the retail side, we continue to maintain our market share of 33%. So we are growing more or less in line with the market. On the group side, we are growing higher than the market growth rate. Market is growing at 21%. We are growing at 26%. So we see a healthy growth across our business lines.
Okay, so you said retail market share is 33%, and on the group side, you're growing faster than the market. You've seen a 26%. Okay. What is the target between the retail and the group mix over the next 1 to 2 years? What would you see as the mix?
So we are focusing on the SMA business, medium corporates as well as banker group business, which is the non-employer-employee groups. So with 48 tie-ups now, we are confident that we should be in a region of 8 to 10% when it comes to group business in the next 3 to 4 years.
So group business will be 8 to 10% of your overall business in the next 3 to 4 years.
Correct. Currently, it's hovering around 5 to 6%. So the group will grow faster than the group rate.
Okay. And the standalone health, just to talk about the health industry overall, the health insurance industry, it's grown at an average of 23 to 25%, while your business has grown at 16%. Just trying to understand why it's not growing in line with the industry, with the kind of market share that you have, and what is the expectation overall?
See, when you compare growth, one needs to compare GWP growth rate. So GWP, we are growing at 18%. Some of the other SAHI players are growing in that range of 23 to 24%, but this is largely driven by group health business. When it comes to retail business, as I said, we are growing in line with the industry growth rate and maintaining our market share. Some of these players are small. We are 3.5 to 4 times of some of the smaller players. So considering our size, we are growing very healthy.
Okay, all right. You're satisfied with your growth, and Mr. Kambli, we take that 18% odd that you're giving us. Two-part question now. Any price hikes that you have planned? Point number one. And also, what is the targeted combined ratio? And give us a timeline as well with that.
See, price hike in the continuous process. We continue to evaluate our various products and the loss ratios. In the next 3 to 4 months, we are looking at a price increase of around 10% of our portfolio, anywhere between, around 15% range. In terms of combined ratio, as we mentioned earlier, we don't want to give a guidance in terms of combined ratio, but yes, in terms of ROEs, we want to maintain an ROE of 19 to 20% on an IFRS basis. So that's our medium to long-term objective, and it should be possible starting next year as well.
So ROEs of 19 to 20%, what is it at currently?
So currently it should be around 15 to 16%. I'm talking about IFRS basis. Deferment.
Got it. Cost. Yes.
Mr. Kambli, just good morning, Prashant here. Just a slightly sort of qualitative kind of a sort of aspect here. Are you, in terms of that issue back I think a few months ago with hospitals, etc. In Gujarat. I mean, generally, have you kind of done do you feel there is a need to kind of do a sort of audit across your partners, etc., to figure out whether there are too many claim rejections, etc., happening company-wide in different geographies, etc., or you think that's not necessary? You put that behind and you kind of strengthen systems.
No, see, evaluation of hospitals, monitoring of hospitals is an ongoing process. We manage more than 15,000 hospitals. So in the last 11 months or so, we have around 800 excluded providers. Where there are some issues, we have excluded them from our cashless facility. We continue to work with the hospitals. The business that we have grown, we have been talking about quality business in preferred locations. What it has done is it has not only helped us in controlling the claims ratio, but it has also helped us in reducing the rejections because there was more noise created from this area. So it is helping us in both ways in terms of reduction of claims ratio as well as reducing the noise. Our reductions also in terms of claims have reduced as we see for 9 months. So overall, it's going on really well, both in terms of relationship with the hospitals, the claim reductions, as well as the claims ratio.
Because I mean that is essentially your partners, right? I mean, and if there is generally a little bit of unhappiness on that side, and there is noise, as you say, about claim rejections, etc. I mean, that is not good for business over a long period of time. So you're saying it's all under control, and you've kind of looked at that.
Absolutely. We continue to track our NPS also when it comes to claim settlement. We are seeing an improvement trend when it comes to NPS for us. So overall, it's going on really well.
Okay. All right, Mr. Kambli, we'll leave it at that. Thank you so much for joining us and taking us through the business as well as the way forward for the industry.